Hi guys, good day to all of you. Lesson for today is lesson 4 on the chapter 25, macroeconomic aims of the government. Okay, for today's lesson, we're going to do the last part of the macro aim of government. I would like to quickly do a recap on the first part. In the first lesson, we discussed about this ADAS or aggregate demand and aggregate supply framework. We discussed on the ADAS, how the AD will look like, AS will look like, what kind of relationship they have and all that. So in the second lesson, we discussed about this, the macro aim of the economic growth. We also discussed about the potential and actual economic growth, short-term phenomenon and long-term phenomenon. Right, and of course the macroeconomic aims are only four important macroeconomic aims, which is the first one is achieving stable and sustainable economic growth. Secondly, to maintain low and stable price level or price stability in an economy. Right, thirdly, achieving low unemployment level or achieving full employment level in lesson 3, full employment level in lesson 3. Fourthly is the balance of payment stability or having an equilibrium, achieving equilibrium in balance of payments. All right, so in this lesson we're going to discuss about the achieving the balance of payment. All right, having a equilibrium or achieving the stability in the balance of payment, where we don't want a deficit in the balance of payment. So but before we go into the discussion on the stability in the balance of payment, you must know what do you mean by balance of payment or the balance of payment accounts. Mainly it is a financial records of economic transaction in a country level. So like you and me, we have our revenue, we have our expenditure. A country also has a revenues and expenditure by doing international trade, international finance, and also investment, all right, with the other countries, other foreign countries or abroad. All right, so knowing this, so the first thing you must know, one important component of the balance of payment is the first one is the international trade under the current account of balance of payment, where you're going to only learn about the current account of balance of payment. So under the current account of balance of payment, international trade is the main important component, followed by the finance like assets, investments, transfer of income, secondary income and primary income. Right, so this will cover the entire current account of balance of payment. Right, so I would like to repeat, the most important thing is the four important macro aims that you have to know in this chapter. The four macro aims of this chapter will be, the first one is economic growth, achieving stable and sustainable economic growth. Secondly, achieving price stability, achieving full employment, achieving balance of payment stability. So this chapter is very, very important. That's why I have divided the chapter into four lessons, because this chapter begins with the macroeconomics subject area. So within the macroeconomic subject area, these are the main four aims that you have to know very, very clearly, because we're going to learn the rest of the chapters all connected, linked with this. Meaning to say, we're going to learn more in detail about the economic growth, how to calculate economic growth, what do we mean by economic growth, of course a little bit of the employment, types of employment, recession, deflation, inflation, poverty level, and so on. All right, more on this. So this chapter is really, really important, and this is the introduction to the macroeconomics. All right, so at the introductory level, the first thing that you have to really remember is the four macro aims of government. So instruction for this lesson 4, students are required to do the following: read, watch and do. Read these attached notes and your econs course book, page 224 and 225, the last two pages of the chapter. Watch video presentation for lesson 4, this video presentation, and multiple choice question. Please do all the questions given here. Multiple choice question, page 226. Exercises on the balance of payment stability and other macroeconomic aims of government, and the homework deadline is on the 20 May. Learning objectives: students should be able to describe balance of payment accounts. Firstly, you must know the balance of payment account, little bit on the balance of payment account, and what do we mean by balance of payment stability or achieving balance of payment equilibrium. All right, we have balance of payment equilibrium, and we got balance of payment disequilibriums like surplus in the balance of payment or deficit in the balance of payments. That is the first thing. Secondly, you should be able to explain other macro aims. You see, other than these four important macro aim, what will be the other than these four macroeconomic aim of a government? So of course, the other macro aim of the government is income redistribution. Okay, income redistribution is going to be the other macro aim of the government. All right, then finally you should be able to understand and explain the possible conflicts between macro aims, meaning to say mainly economic growth is one of the aim of the government. Secondly, achieving full employment is another aim of the government. But the problem is when these two has been achieved, automatically these two will lead to inflation in the country. All right, inflation will come to exist together as the country achieves stable and sustainable economic growth. As the country achieves full employment, automatically inflation will exist together. So that will be the conflict of macro aims. Therefore, how the government will tackle this problem, it is by implementing three important policies, which is fiscal policy, monetary policy, and supply side policy, that which we will learn later on. So that means the following chapter will be on the fiscal policy, followed by the monetary policy as well as the supply side policy. So all this is a continuation of the entire section 4 on the macro part, the macro part. So it is important for you to very clearly understand the possible conflicts between the macro aims, right? So now let's look at the balance of payments. So if anyone asks you what do you mean by balance of payment, the first thing that you must say, it is a financial records of a country. Like you and me, we have our own financial records, right? Bookkeeping, financial record, like you have records for your expenditures, you have your records for your revenues, income, salary, or whatsoever income or revenue that you receive. So similarly, a country has lots of financial records of the economic transaction, because the country will do, in a country level, firms in the country will do imports and export, and every transaction of import and export has been registered in the balance of payment accounts. All right, in the balance of payment accounts, all that has been registered properly in a yearly basis. As well, not only the trade, international trade, and in addition to that, financial records also has been registered or recorded in the balance of payment accounts. Okay, so it is not only between two countries, it is between one country with the rest of the countries in the world, So therefore, it is a really very big account, which is the balance of payment account. So as a country imports or export, the country will pay out or receive income from abroad. The meaning to say, if you export goods and services from one country to another country, the particular country who is exporting goods and services will receive money inflow into the country. All right, so as well as the money outflows from the country as the country choose to purchase or import goods from abroad. Right. Similarly, there are some other components of financial components, such as income transfer, investment transfer, profit transfer, interest transfer, and all that. Okay, international investment, all right, foreign direct investment, debt, and a lot of other financial matters. So for here, the economic transaction registered in an international country include goods and services. We can break goods and services into two: exports of goods, import of goods. Meaning to say, exports of products, imports of products. As a country export goods, the country receive revenue from the export of goods. Okay, export of goods means selling goods abroad. Okay, so you are doing a sales abroad. So in return, you will receive revenue from abroad. Whereas we also export and import services, exporting services and also importing services. In return, we get revenues from abroad if we export services, whereas we have to pay out to other countries, to foreign countries, if we are importing services. So we can define balance of payment as a comprehensive financial record. So if anyone asks you what is balance of payment accounts or balance of payment, it is a country accounts. It is a country accounts, or it is a country level financial record, okay, maintained by the central bank of the country of all economic transaction takes place between the particular country with the rest of the world countries, okay, with that particular country with the rest of the world countries. So export includes both goods and services together with other capital or finance items that cause inflows of funds, inflows of money, okay, which registered as a credit. If there's a money inflowing into the country, we call it as a credit. We call it as a plus surplus. Is a money, is a revenue from abroad in the international transaction. Whereas imports of both goods and services together with the other capital item cause what? Outflow. We have to pay out the money which registered as the debit item, a negative or money outflow in the balance of payment accounts. So because there's inflows and outflows, there are possibilities of a balance of payment deficits and surplus. Deficit means negative value of balance of payment, or surplus of values of balance of payment in the yearly basis. So sometimes, like for example 2018, the BOP can be, for example, can be a negative balance of payment. The meaning to say we pay out more than what we receive. That meaning to say outflows are greater than inflows. Probably we may have imported more compared to exported goods. All right. Whereas if it is a surplus, therefore it's a positive value in the balance of payment where inflows are greater than the outflows. All right. If the inflows exceeds the outflows, if the inflows of money or receipt of revenues are greater than the outflows, expenditure from all the economic transaction, therefore there's a surplus. For example, in short, we can say BOP surplus or BOP positive if inflow greater than the outflow. As such, surplus and BOP generally means a better performance in the external trade from or the external sector, the fourth sector. As I told you in the previous lesson, there we got 4 economic sectors. All right, consumers, producers, government. Consumer is going to be the household, or the consumer is going to be the first sector. Producer going to be the second sector. Government or the public sector going to be the third sector. The fourth sector is the external sector. So this one we're talking about the external sector. External sector, better performance in the external sector can be identified by looking at the BOP accounts. If the BOP accounts is positive, therefore the country is performing very well in the external sector. All right, a better performance in terms of the external trade or external sector. On the other hand, if outflows of fund is more than the inflows of fund, resulting in what? All right, resulting in a deficit in balance of payment, meaning to say we are not doing or we can say it is not the external trade performance is not favorable to us. All right. So let's take a look at this small table for understanding. So if you look at here, the country A and country B, there are 2 countries, country A and country B. Let's say for country A, the total inflows for one particular year is $200 billion, and outflow is what? $100 billion. So we can say the country is performing well in the external trade because the balance of payment is positive 50. How we can get the balance of payment positive 50 is 200 inflows minus the outflow. Very simple. Take the larger value, minus out the smaller value. Inflow is 200, outflows are 150. 200 minus 150, we got what? 50 positive in balance of payment. Whereas if you look at the country B, inflows are 200, outflows are 230. So we can take inflows minus the outflow. So we get a negative 30 value is a deficit in the balance of payment. So these are the 2 cases of instability in the balance of payment. Balance of payment unstable or disequilibrium because there are surplus and deficit in the balance of payments. So the aim of the government, in this case, the aim of the government is to achieve there's no negative or no positive. They want a balance of payment equilibrium. They want to achieve a balance of payment stability. The country wishes, they don't want to achieve a positive. A positive is always good, favorable to us, but even surplus in the balance of payment sometimes can have some long-term effects to the country. Therefore, the country wishes more better for stable or balanced balance of payment. So balance of payment stability. Why a surplus? Although a surplus is a good thing for the country, where it indicates a better performance in the external trade, but however the country find it a bit riskier for the country to achieve a surplus all the time in the balance of payment, because a surplus in the balance of payment is enjoyed at the expense of other countries. If you are doing a trade, if you are doing a trade between one, there is a trade between two countries. If only one country is always gaining, another country is losing all the time, therefore the losing country may be discouraged of this. Therefore, the trade is not a healthy trade, or it can be considered as unfair, and this may lead or this may have a long-term effect where the losing country may think of other alternative. Right? Therefore, the trade may not be very successful. So in this case, a surplus, the balance of payment all the time, it is not healthy for the economy. At the same time, a deficit in balance of payment is expected to have a negative effect or detrimental effect on the income, employment and growth, because as the countries losing money, as the outflows are greater than the inflows, it will affect the exchange rate of the country, employment level of the country, economic growth of the country. There will be some negative impacts towards the employment, income and also the economic growth, as well as the exchange rate stability. So therefore, both disequilibriums of the balance of payment considered is not favorable, is not very much favorable to the economy. Therefore, the most desired long-term goal of a country is reaching an equality in the balance of payment, where inflows equals to outflow, so resulting from various type of the economic transaction. Therefore, the balance of payment stability or balanced balance of payment, or balanced BOP, meaning to say inflows equals to outflows, or if you take the inflow minus out the outflow, you must get a zero value. A zero value of the BOP is not a positive value of BOP or a negative value of BOP. So the other macroeconomic aims, other than these four main macroeconomic aims, I repeat, the four main macroeconomic aims are the number one is achieving stable and sustainable economic growth, achieving price stability, achieving full employment, achieving balance of payment stability or equilibrium in the balance of payment. Other than these four, the other macro aims of the government is to achieve income redistribution in order to reduce uneven distribution of income in an economy, or to narrow down the gap between the rich and poor, as well as to do the poverty eradication, to reduce the poverty level in the country. So in most market and mixed economies, wealth and income are not evenly distributed, meaning to say the wealth or the money is not evenly distributed among the different private individuals. Some are rich, some are poor, and most of the time rich gets richer, poor get poorer. So as more poor get poorer, so this will increase in the poverty level of a country, right? So therefore the aim of the government, so as the poverty level increases, this will affect the people's welfare in general, overall. Therefore, every country aims to eradicate or reduce the poverty level in a country. So in order to achieve a drop or to reduce the poverty level in a country, right, the government aims to do what? Income redistribution by imposing taxes like direct and indirect tax from the rich, and redistribute the tax revenue to the poor in the form of subsidies, financial aid, free education, and free other merit goods such as education, healthcare, and so on. All right. So taxes, government may impose higher tax on the rich, mainly on the direct tax, income tax mainly, or corporate tax, and such funds from the tax income will be given to the poor people in an economy as benefits in the forms of what? Free education, healthcare, housing, social wealth and other social services or social welfare benefits. So this is expected to narrow the gap, meaning to say this will reduce the uneven distribution of income. All right, these measures are expected to reduce the level of poverty as well. So sustained economic growth in many countries, okay, in many countries, the government may implement economic policies and actions to reduce pollution and wastages of economic resources. So they protect the environment and are concerned about the conservation of natural resources. Usually the Western economies or more developed economies they are more keen in achieving a more sustained economic growth in the long run. So this is going to be the most important part, which is the possible conflicts between the macro aims, right? So where, as I told you earlier, okay, the four main important macroeconomic aims is what? Achieving stable and sustainable economic growth, followed by achieving the full employment. As these two has been achieved, automatically there will be an increase in the general price level. That meaning to say, if these two has been achieved, automatically the inflation will come together with this. So as the inflation exists together with this, all right, there can be some conflicts where the government need to do some implement policy measures, policies such as fiscal, monetary policy, as well as the supply side policy, which we're going to discuss in future topics, in order to control the hike in the general price level. So at the same time, as the higher, how the interconnection, or how the inflation can exist as there is a economic growth and full employment, is when the country is producing more goods and services, the country has employed more workers will be earning. All right, as more workers are earning, therefore this will increase the aggregate demand in the country, total demand in the country. As the aggregate demand increases, the general price level increases, meaning to say the prices of goods and services will be increasing. Therefore, price stability cannot be achieved together or simultaneously with the full employment and higher economic growth. So these conflicts always exist in an economy, and how this can be tackled by the government will be the future topics, which are the fiscal policies, monetary policies, and supply side policies. The implementation of the economic government policies in tackling the price instability, which caused by the higher economic growth and also the higher employment. So that's all for today. Thank you very much.